Money. Money.
What a week it was for mortgage interest rates. Biggest intraday drop of the year for mortgage rates happened this week. Mortgage rates fell at their fastest pace of the year following Wednesday's rate hike announcement from the Fed. Yellen's message was, "My work here is mostly done." Yellen, at her first news conference of 2017, said, in short, the Fed believes that after nearly 8 years of trying to nurse the economy back to health, it worked and is nearly done. The simple message is the economy is doing well, Yellen was quoted to say. She suggested no urgency towards the tightening of money supply that might suggest a hair-trigger readiness of accelerate interest rates increasing. Yellen is feeling little fear that the Fed is behind the curve, suggesting that 2 more interest rate increases are on the way over the remainder of 2017. 2 things have changed. First, that day now feels intimate with the unemployment rate at 4.7% and inflation closing on a 2%. A Fed thinks best. That is the key reason for the Fed raised in interest rates in the target on Wednesday. Second, markets now believe that the Fed's message that higher rates are on the way. Bond market suggests that the Fed will actually follow through with its intentions on a gradual interest rate rises. You couldn't say that a year ago. Now, this will, if these plans stay in force, remain the slowest cycle in interest rate increase in modern history. If you're wondering why mortgage rates fell while the Fed's rates moved up, the explanation is simple. Financial markets are already full account of the change that the Fed would hike interest rates today. But being on Wednesday, they'd even gone a step further and began to account for the faster pace in the future rate hikes. And it was that future outlook that allowed for our pleasant surprise. As it turned out, the median forecast among Fed's members didn't see that the Fed fund rate ending in the year was higher than the previous batch of forecasts, both in 2017 and 2018. While there was no way to know exactly how much the markets were prepared for the forecast to move higher, it is certainly more than not at all. In other words, rates have recalled in fear over the past few weeks, expecting to see a very scary day. Now, when the monster turned out to be a little bit cuter, rates calmed down quickly. The average lender offered midday improvements that brought rates about 1/8% lower. Some situations, some mortgage lenders saw actually 2 decreases in rates, moving at 1/4%. Now, in terms of a conventional 30-year fix, most lenders are back down to about 4.25%, which is at your standard cost structure for that. Now, a little update on the Seattle real estate market. Medium sales price in Seattle, $540,000. Price per square foot in Seattle, $418, an increase of 13% over last year. A medium rent per month in Seattle, $2,600. So a little bit about what happened with mortgage interest rates, and that was my money chat for you today. Coming up next in the Money Hour, increasing your home values and curb appeal with an alternative to concrete replacement. Save time, money, and a better to our environment. Patrick Hayes with Superior Slab Jacking right here at 1150 AM KKNW after this short break.